I think he's backing off a bit on the extreme tariffs. Scarlett had pumped up prices and a lot of expenses for a lot of companies. But specifically for aluminum, the lessons in aluminum are you never want to buy it above 3,000. It first traded 3,000 in 1988. It pumped above 3,000 again this year, and almost always it goes back down to 2,000. It's basically an electrified metal. A lot of the key costs for aluminum is the cost of electricity, and we all know that's going up. But the bottom line is, unless you really expect decent demand pull out of China from that industrial behemoth, which has a 10-year note yield of 1.8%, which is showing severe deflation, I expect aluminum, most industrial metals are very highly subject to maybe if the S&P 500's peak, that's going to be the number one force potentially pushing them lower.
Yeah.
I'm going to remember that, electrified metal.
Yes, I like that. I'm going to use that.
Yeah, because you take the ore and you have to zap it with electricity to get the aluminum out. So, yeah, it is a play on electricity. It takes enormous amounts of electricity to make it.
Yeah.
Interesting. See, we got it all here. John Tucker, we got Mike McGlone. So with aluminium, as our friends in England call it, at $3,077, and the fact that it's a industrial metal, not a precious metal, still seems a little rich here?
Absolutely, Paul. The key thing I look at it as an ex-trader, you look at it, any of these positions in industrial metals, most notably copper, if you're bullish or long that, you have to be looking over that S&P 500 and hoping it stays above 7,000, because if it doesn't, industrial metals basically have been trading almost tick for tick with the S&P 500 for almost 2 years now. They're both up maybe 30 to 40%. So I think the risk is that it's going to roll over. I put out I just viewed copper when it got above 6 as a prudent short to prove that strength, show that strength. Similarly with Bitcoin, when it was around 90,000, all these markets are completely dependent on beta going higher. And we're seeing now with 180-day volatility, S&P 500 running near an 8-year low, risks are we get a little bit of normalization in stock market volatility as we run into the year.
All right, I can't resist. I need to ask you about gold.
Yeah, I knew.
It was coming, right?
Yep.
$5,011 right now, up 1.3%. It's back towards gaining because for a while it really come off the highs from late January. And we know there's definitely some crackdowns happening in China where the latest leg of demand really came from. We see authorities in Shenzhen, for instance, which is a retail hub for Chinese gold, warning against illegal activities. That's not denting the price very much. Just how big of a driver is Chinese speculation for gold prices?
Well, I think those key words, Scarlett, nail it. First of all, China and speculation. I think I'd lean more towards speculation now. There's pretty significant speculation. I was on a podcast with our Hong Kong team about 2 weeks ago, and it reminded me exactly what I remember hearing in Bitcoin and cryptos a year ago. Sell side's loading up and selling some great ETFs, and buy side's but speculators are jumping on board. What you're seeing in gold right now, run $5,000 an ounce, was my dream a few years ago when I covered to get 2,000, but now it's just way too expensive. It runs into that number one risk in all commodities. Up too much. When it goes up too much, it shifts and go back down. And I'm just really worried what it means when you have this kind of volatility in the precious metals, most notably gold and silver, with cryptos collapsing and stock market volatility still low. It means to me stock market volatility is going to go up, and that might be a number one pressure factor on gold as we potentially hit margin calls. So I think gold's run most of its course. And it's just it's too risky to be long it here if history is a guide when it stretches 2 times its 60-month moving average.
And silver's really kind of come back big time. And you told us anything over 100 really gets your attention. And it was up, 120 change, and now we're way back down.
Yeah, Paul, I think this is going to be a down year for silver, particularly if the stock market goes down. Silver's an industrial metal now, so the facts have changed. I think it drops back to near 50. 50 was the old resistance. And when it got above 100 a couple weeks ago, it reached the highest ever versus crude oil and highest ever versus copper. Now, copper is its metal brethren. They're both the best conductors of electricity. So I view silver as the devil's metal. Is going to cause most pain to head lower. And I don't see what keeps it above 100,000. I still view it as a prudent short.